It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Good morning, Craig, and thank you for having me. No, I'm definitely not a Celine Dion fan, though she has an amazing voice, and happy birthday to her today.
You're into your cars, your fast cars, AMG GTR Mercedes. You race this on the track, do you?
No, I don't actually race it on the track, though it is a racetrack car. It's really my baby. It's my passion. I love having it as my Sunday driver, but I love taking care of it and taking it to Cars and Coffee and other shows. And I sometimes use it in my real estate videos, but it's just a beautiful car. I just the way that the car is designed and the quality of the manufacturer is just absolutely, it's amazing. It really is. And I love driving it. It sounds loud. It goes fast. It's just so much fun.
Sounds good. I will have a look at that. Now, Cronulla is holding its position as a premium coastal market where you are, especially in the unit sector. Houses are still expensive, and we'll talk about the median local house prices in just a moment. But staying with the unit demand, that is surging. It's a classic shift where buyers are adapting rather than stepping away from the market. Are you surprised at what is happening in that unit market at the moment?
No, not at all. This trend has been continuing for a number of years now, Craig. We have lots of people coming from other areas wanting to move into the Shire. The quality that we have here is just very attractive, especially, downsizers wanting a coastal change, a bit more relaxed lifestyle. There's just so much quality that's offered in our apartments with design and finishes, and not surprised at all.
With the unit market where you are, there is a range of unit products. So for those that are listening, thinking of, I do like Cronulla, what is happening with the different product aspects, can you talk through that for us?
Absolutely. So we have our older style apartments built in the 60s. They're very popular with first home buyers. We certainly have, investors buying those apartments up as well, especially if they're within proximity to the town centre and station with the new low to mid-rise housing policy. So lots of investors are grabbing hold of those sorts of properties where they can be amalgamated with the rest of the owners there to form a new development site for luxury new apartments. First home buyers, investors, but you also then have the luxury scope. Now we have three different markets in Cronulla: North, Central and South. Three different demographics of clients. All three areas have luxury apartments, but buyers are very specific as to which area they generally require. You don't generally have somebody saying, well, I want North Cronulla or South Cronulla. They're very specific in their requirements. We are lucky enough in the Shire and the St George area, but certainly the Shire, to have some of the highest level of award-winning builders throughout Australia are located in the Shire. I see buyers wanting that flight to quality. The high-end apartments, we have some great architects involved in design there, and finishes are just absolutely superb. And the buyers are very specific. They know what they want. They know what area they want to buy in. If they're a golfer or they're a baby boomer, surfer, they're going to want to be in that North Cronulla area. The older generation will be in Central Cronulla, where they can walk to doctors, cafes, meet up with friends. And South Cronulla, of course, is certainly a peninsula. And if you're wanting that quieter area, that's going to attract those types of clients. So I'm honoured to be representing some fantastic developers with these projects.
Yeah, so that's a great sort of breakdown on the unit market for us. Let's just have a look at the median house prices at the moment, between 3.3 and 3.4 million. And that median unit price, that is hovering around the 1.1 million. If you look at the houses, that has seen moderate growth in Cronulla, but those units, coming back to the units, look at the growth between 13 and 14%. Buyer demand for units is rising significantly, as you say. It is very much a unique lifestyle. I've heard this from many people. One of the attractions being it is one of the only Sydney beach suburbs with direct train access to the CBD. How significant is that, do you think, for Cronulla?
Craig, that is very significant. There's something that is bought up by purchasers. In fact, I sold to some people that were coming from the North Shore area. I'm always asking buyers, like, what brings you to Cronulla? Like, have you got family here? What has made this decision? And a couple said to me only a couple of years ago, Suzanne, Cronulla is the only beachside suburb with a railway line. It's very important to us. It still has a village atmosphere. It has two of the best ocean pools in Sydney. And where the apartments are located, you can just easily walk into cafes, restaurants, clubs, etc. So it's a real lifestyle area. I've sold a building down behind Cronulla Station. I had people come from as far as Perth. Only beachside suburb with a railway line is very important to purchasers.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
Hey, good morning if you are on the Sunshine Coast and especially in Caloundra, because we're just going to have a quick look at the median price, where a house median price is around that $870,000 mark. Days on market there, 34 days. Units, the median price, 675. Well, it kind of ranges between a one bedroom at that price and it goes right up to 1.4 million for units in Caloundra. Boy, has that area expanded or what? Let's right now go to Melbourne and catch up with Trent Wiltshire. He is the Manager of Research from RLB. And a very good morning to you, Trent. Welcome along to the Real Estate Breakfast. Nice to have you on this morning. And you were telling me that you are a AFL follower of North Melbourne, off to a bit of a decent start this season.
Good morning, Craig, and thanks for having me on. Yeah, so I'm a Roos fan, long-suffering Roos fan, but there's some positive signs this year. Been to 2 wins out of 3 games, so not a bad start.
Yes, well, Meatloaf did have that song, 2 out of 3 ain't bad. So, yep, nice start for North Melbourne in the AFL. Have you guys done some sort of modelling in terms of the Iran war continuing and what that'll do to these construction costs moving forward?
We've done a couple of scenarios, but it's really, given how much this has been changing recently, we've sort of done a worst case scenario. If this drags out for a long time, obviously a terrible human tragedy as well, but it will clearly have a big impact on prices for a while. So we might see costs shift up, and that will mean costs flow through to higher prices quite significantly and maybe don't step down. And that may actually end up flowing through into high interest rates as well. So really a double whammy. We haven't put a number on it yet, just given the uncertainty around it.
That is talking all about the big commercial construction costs. Let's drill down into some of the numbers, if you've got them at the ready, as far as residential building costs.
So for residential, it's still affected. Like the biggest immediate impact has been through those fuel prices. So diesel running costs for the big equipment on the big projects has been an immediate impact. Bitumen and asphalt as well. So for road projects and there's for some resi as well. But we are seeing things flow into residential. So you could think about those transport and freight costs for every delivery that goes to a construction site in the suburbs, building a home or a townhouse complex, polymer-based products, plastic piping that used for plumbing, those types of things, that's up about 30%. Steel up 5 to 10%. Some aluminium cladding and facade products up by about 10%. So it's not everything, but it's becoming a broader set of inputs, and that will flow through, unfortunately, to prices for new homes.
It's interesting because there's a lot of talk about the construction industry slowing down, but the reality seems to be quite different. Across Australia, we're seeing very high levels of activity with more than 800 cranes operating nationwide. I always find this quite interesting because it's a great index. The more cranes that are out there and operating, the busier the country is.
Yeah, so RLB does a crane count twice a year in Q1 and Q3, and we just completed the one recently. So we found there was 838 cranes around Australia, down a touch from last year where there was 845 cranes, but still a very high level. And that sort of aligns with the ABS data, which showed there was a record amount of construction work happening in Australia in 2025. The sector is strong. One probably thing to note that the residential sector is probably a touch softer than what it had been. So crane numbers incomes in the residential sector dropped a bit. But if you look at things like building approvals, it suggests that the actual resi sector might start to pick up again soon, noting that the Iran conflict has thrown a spanner in the works for a lot of things and might make some projects not feasible. But that's what the numbers from the Crane count.
And good morning if you are listening in Tasmania this morning, where there's a real affordability issue emerging in Tasmania's rental market right now. New data from REA Group yesterday shows that typical household earnings of around over $90,000 can only afford about 19% of available rentals. It is the lowest share in the country. And for lower income households, well, you might as well forget it. It's so tough that they have access to virtually nothing. Where are they going to move to? In Hobart, rents have climbed close to 10% over the past year, which is why we're seeing household earnings of over 90 grand can only afford about 19%. That is very dire. That is very concerning. And if you're in Tasmania, let us know if you are looking at trying to get into a rental, how you are finding the market. You can either leave a voice message or you can email us at myrealestatepodcast@gmail.com. We would love to hear from you on that issue. Let's right now take you off to Dubai. We're going to catch up with Dana Lewis, who works in real estate. But prior to that, Dana was a news reporter for Canadian television and also NBC television in America. He was also embedded with combat troops in Iraq and Afghanistan. Dana, welcome to the Real Estate Breakfast this morning. First off, have you ever been to Australia?
I haven't. I've traveled and worked out of 55 countries. One of the big gaps, I think, is that I got to get to Australia. So this is as close as I can get right now.
Well, Australia will be here when you are ready to fly out of the UAE. Your story, as I mentioned, it's an interesting one because you gave away the news reporting going into these war-torn countries years ago, which was, let's face it, extremely dangerous work. You moved to the UAE because you're involved in real estate. And then suddenly in the UAE, bombs are dropping from Iran. You are back literally to where you started from and probably looking through a lens from both sides.
You know, Craig, it's a biggest surprise to me that I would have thought that being a war correspondent and being a real estate broker in Dubai, suddenly those talents would somehow, run in parallel and complement one another because, I actually had missiles and drones exploding overhead when I was in Dubai. And I thought I got away from all this.
Exactly. I mean, nobody expected it. And for that reason, no doubt everybody that knows you has probably been calling you for a reaction.
Yeah, my mother first, telling me to get out of there. But actually, I think Dubai, like many people, has been very safe in the sense that they've been able to intercept, 95% of the incoming. And we've seen that really dropping off, right? I mean, in the last, especially 10 days, we went from a few hundred missiles and drones to, a handful of missiles and drones. But, even one is enough to disrupt the market, cause anxiety, and it's something that cannot go on. And that's why you have the UAE, surprisingly though, Craig, not saying, let's get this stopped right now. They're saying, like Saudi Arabia is taking a much longer view and saying, this can't end with ambiguity. This has to be solved once and for all with Iran. And some very surprising comments coming out of the UAE, even from the UAE ambassador, who has done a Wall Street Journal editorial now, if you want to talk about that.
Yeah, go on, because I know that you've got some comments around that.
Well, it's just a surprising article because a lot of people think that the UAE sees this conflict differently than America does. But in fact, they echo a lot of what the U.S. administration says about removing the threat once and for all. So here he says, Youssef Utaba says, quote, "We want Iran as a normal neighbor. It can be reclusive and even unwelcoming, but it can't attack neighbors, blockade international waters, or export extremism. Building a fence around the problem and wishing it goes away isn't the answer. It would simply defer the next crisis." And that's so important what he's saying, because the UAE doesn't want to go through this, and the whole region, the Gulf region, doesn't want to go through this in another 5 years or another 6 years or 8 years. They want it done. So they want the threat removed from Iran. And so that's when they're talking about similar things that the U.S. does in terms of regime change, the elimination of the nuclear program, and capping on long-range ballistic missile program.
Yeah, it is a fine balance for the UAE and other Gulf countries, and many Aussies have made Dubai home. The real estate market there has literally been on fire since COVID. You know, people are finding better values for their property buying in Dubai. You have the exchange rate of Aussie dollars earning a lot more once you convert your dollars into dirhams. And there is no tax on your income. How good is that? It has been the land of opportunity. However, lots of concerned parents and friends of people who left Australia over 5 years ago to take up residence there in Dubai are concerned with good reason. But the market is uncertain now. Aussies in Dubai are weighing up, should they come back to Australia? How do you sell in this current market? And there is this anxiety leading to the market being looked at in a completely different way.
They're uncertain, and you inject uncertainty into the marketplace, and people pull back. And there's a lot of anxiety, both in Dubai, where I'm getting all sorts of notes from people, what do I do with this off plan? Can I get out of it now? I'm scared of the situation. Should I be panicking? Do I go forward with planned investments? And when you inject all that uncertainty into the marketplace, it doesn't kill the market. It doesn't collapse the market. It freezes the market. And I think that's what we're seeing now. A lot of people frozen in decision-making, not sure how long it's going to go on and whether they should pull back or proceed. The answer tends to be, I'm going to wait. And like Justine, I think there's a lot of people who will wait, and that will affect the market, right? Because these big developers in the off plan, 70% of the market is off plan. So if you remove the off plans from the market, or, okay, let's not say remove, but if you throttle back on the number of people investing, which surely we're seeing, that's going to affect the Dubai market and the UAE in a very big way. And then you have a lot of people who, are feeling some financial pressure, are worried about being overly exposed on their inventory. And I think, Craig, everybody is measuring that 4-letter word, risk.
We connect you to the best real estate information across Australia. The Real Estate Podcast.